Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. Last week was a game changer. The dollar is going parabolic, and because of this, it's setting up a stock market crash in October next month. We are going to look at this in more detail at the end of the video, and for GMT members, I am putting out a special video this weekend before the market opens to go through that in detail. Very quickly, many of you were asking after last week's video for more information on the membership. Because I want to keep the weekly Forex Forecast video focused on the analysis, what we've done is we've created a special information page for you to read through in your own time if you are interested, and we have the link in the description below and also in the pinned comment below, so you can click on it and you can see all of the different information about GMT membership, including all of these 75 markets that we look at on a daily basis with live market analysis. And if you have any questions, you can simply click on the website and ask one of our team in the live chat section. So with that said, let's have a look at the economic calendar, because last week was a huge week and it was pivotal. We had FOMC on Wednesday, which was really the big one. This was where Powell came out reaffirming what he said at Jackson Hole, and this caused the dollar to rally. And at the same time, we had the BOJ, which failed to raise interest rates, but they intervened in the yen last week, which caused the yen to spike. We then had the Swiss National Bank raising interest rates, as well as the Bank of England raising interest rates. And actually, despite the Bank of England raising interest rates and the Swiss National Bank, and also the Riksbank out of Sweden last week raised interest rates, we actually got sell signals during the week on all of those currencies, despite the raising of interest rates, and all three of them sold off hard after those interest rate decisions. And just a quick look, because we do have the Italian elections on Sunday, which can affect the euro and also EU stocks. And we also have the PCE, core PCE price index, coming out next week at 1:30, and this of course is Jerome Powell's preferred measure of inflation, so that is going to be an important piece of data next week. Okay, so let's have a look at the scorecards for the coming week, and look at this. When I said things changed last week, I wasn't kidding you. This is extremely rare. You only see this in the scores, these multiple changes, and especially look at the Japanese yen, a score of +5. You only see this after large market changing weeks, and that is exactly what we had last week. We do have at the top of the leaderboard still the Swiss franc, but notice the Swiss franc comes off of overbought for the first time. It was +4, it's now +3. In the PDF guide that we've attached in the description in the pinned comment for you to use these scorecards, you will see that is the sign that if you are long Swiss franc pairs, you should be looking at booking profits. It doesn't mean it's a short. It just means we may get a near-term bounce over the next few weeks. So because of that, my first favorite currency going into next week is the dollar that I want to be long. It is holding up at +2. And as I said at the beginning of the video, it is actually, as it currently stands, going parabolic. And we could be in for some very, very severe moves in the US dollar. So you have to take everything into context next week, because it could be very volatile. So just beware, we will go through this in the markets. The next best long for the first time in a long time is the Japanese yen. I am going to be interested in yen long plays, and I'm going to be preferably pairing those with the Canadian dollar, which we've got an outright sell or short bias signal for -1 to -2. In fact, it was +1 in last week's video, and it's now -1, which is a net change of -2. We also have a big net change in the pound. The pound is the most bearish on a 1 month forward looking basis, and also the New Zealand dollar to the downside as well. So my preference going into next week is going to be pound, New Zealand, Canadian dollar shorts vis-a-vis the US dollar and also the Japanese yen. The very fact that we have the Japanese yen going from -4 to 1 in the scorecards for the first time, I mean, the yen actually came off of oversold as well, but this went straight into the positive column, which is not what you see very often at all. In fact, I can't remember the last time I saw that. And this is a sign that on a 1 month forward looking basis, we could be about to see some strong risk off in the markets. And that includes stock markets and of course all other markets, including commodities and also currencies. So major changes last week, not to be ignored. It was an extremely significant week. Okay, so let's have a look at the individual currencies, starting with the dollar index. And normally we're on the daily chart looking at these, but we have to go to a weekly chart because this market has got so volatile that you have to take the bigger picture to understand what's going on here. We haven't even had a correction in the weekly chart, really. I mean, I know these are pullbacks, but these are not significant corrections. The last time we had that was down here, about $90. We're now at 113 without any significant correction in the DXY. This move is stunning, and it's actually historic as well. And the scary thing about this chart is the dollar is actually accelerating. It is actually accelerating. It tried to form a very near-term top recently, a couple of weeks ago, and we saw last week the gold price try to bottom, and it failed. It failed quite quickly, and the DXY accelerated to the upside. So the dollar is going parabolic. Yes, when you get sharp moves up like this, you do run the risk of it snapping back in your face. So if you are trading this to the long side, I would be using wide stops to make sure you can accommodate the volatility we're now seeing. However, I don't think we have any choice as traders but to be on the long side of this where we can. So again, I'm not saying jump in right at the top here with the tight stops, because that's just asking to be taken out on a volatile pullback. But I would be treating any pullbacks in the dollar now as an opportunity to look for further advances. Next is the euro, and look at this on the weekly chart. Huge sell-off to the downside. We've taken out the previous target here. And I mean, honestly, at this point, we do have a target down at the 0.9670, but this is selling off so hard. I mean, it's unlikely to respect any of these targets in a significant way. We have broken below the 4-year breakout of the 1.06710, which I've been highlighting in recent weeks, and we've broken out below the 7-year breakout of the 1.0375, and now this market is accelerating to the downside. So I see further declines to the downside in the euro. The pound has broken the major breakout level that I highlighted to you in the DXY thread I posted on Twitter and also in the description below. And because we broke this level, you saw the capitulation here, which we haven't seen in the pound since the COVID sell-off and also the Brexit sell-off. The pound and the UK are at risk of having a currency crisis here, in my opinion. So this is a serious problem for the pound, and previously I did highlight that I believe the pound was going to parity. I think we're probably going to get there quicker than most people think. Next is the Swiss franc. You can see the Swiss franc did sell off last week, but it's holding up significantly better than the other currencies. So we're not looking at Swiss franc in the markets this week purely because of that signal from the scorecards from overbought to oversold, just telling us it's not as good as it was. But if you wanted to look at the Swiss franc pairs, I would be treating any pullbacks in the Swiss franc pairs, for example, pound franc to the downside, New Zealand franc to the downside, CAD franc. Any pullbacks in those markets, I would still be treating them as opportunities to look for further advances in the Swiss franc on a relative basis. So I do still think you see pound franc go down in the near future, New Zealand franc go down in the near future, etc. But it's off the table this week just because I think there are better markets. Relatively speaking, though, it's holding up pretty well. Next is the Japanese yen. Now, last week, you can see the Japanese yen is still right at its lows. Last week, the BOJ intervened in the Japanese yen, and it does look like on a relative basis, with everything that's happening, the Japanese yen is going to be one of the better longs. It is still not as good as the dollar. The dollar is really the #1 currency. But on balance, relatively speaking, I do favor Japanese longs for the first time in a long time this week. Next is the CAD. The CAD took out both targets and smashed through these last week. Again, I have the next target down at the 0.72930, which is this low over here. However, the chances of these being respected again are small. I mean, look at this move in the CAD. This thing is also crashing. I mean, the Canadian dollar is most likely coming down to the 0.6810, let's say, which is the low of the COVID crash. And in fact, it's my belief, and has been for a while, although I haven't actually stated it yet, but it's my belief a lot of these markets, including potentially US stock markets, Australian stock markets, and the currencies we're looking at here, are likely all headed for their COVID lows. Now, again, please be aware that when you get these major 2 standard deviation moves, you very often see a snapback. So you need to time any trades that you're taking next week, and you need to take into account the volatility. These are going to be difficult markets to trade, and if you trade them with tight stops, you're going to be asking for trouble, in my opinion. Next is the Australian dollar. Took out its target at the 0.66180. The next target to the downside is 0.64070. I also think the Australian dollar is eventually going to find its way down to the previous bottom over here of the COVID low. Now, if that's the case, we have still quite a long way to go in the dollar. And even though my longer term target for the DXY has been 120, we could even breach that by the looks of things. And the final currency here is the New Zealand dollar. Again, we smashed right through the target. And the next target in the New Zealand dollar is in fact the COVID low of 0.5466. That is the next target, and we could get there pretty quickly. So again, there is some serious trouble in the markets now heading into October. We do have currencies which are crashing. The dollar is going parabolic. And at the end of the video, when we look at the stock markets, you will see they are right at the point of potentially breaking down. So I'm not trying to scare you with this. I'm not trying to produce fear content to get clicks or clickbait or anything like this. I do really believe that there is serious trouble coming in the markets, and I just want to give you the information which I believe to be true and proper. Okay, so let's have a look at the market, starting with crude oil. Crude oil was a market I actually highlighted to GMT members on Friday. I said I was looking at this and we dropped 5%. I mean, this was big. This was at the same time we had that explosive rally in the dollar. We took out the target, and we do have some very nice momentum in this market now. So any pullback in this market next week is viewed as an opportunity to look for shorts into the 77.65. And if we can break through here, I'm looking down towards the 74.23. So look for a pullback, possibly even a retest of the breakout over here. I think crude oil is going to be a good opportunity next week. Next is pound dollar. You can see the momentum, the capitulation after the break of the multi-year 1.14098, which I've highlighted for you recently and also in the DXY thread. We did take out the target. I mean, we went straight to the target highlighted last week at the 1.0886. Coming into this week, we have great momentum, so I am looking for further declines. Just remember, if you're trading a market crash, which is very likely what you're going to be doing here, you should expect the pullbacks to also be volatile. In fact, they might be so volatile, very often in market crashes, pullbacks are so volatile that you actually be scared to take them because it looks like the market's reversing. So any pullback in pound dollar is simply viewed as another opportunity with a wider stop to start to look for shorts. And I'm going to be looking down towards the next key of support to the downside at the 1.0520. Next is New Zealand dollar. We took out the target at the 0.59210. I do believe, as I said, that New Zealand dollar comes back down to the COVID low. So any pullback in this market next week is simply going to be viewed as an opportunity to look for shorts. Down to the next key of support, there is nothing but air between where we currently are and the 0.5473 in New Zealand dollar. Next is dollar CAD. Huge move up in dollar CAD recently, and I am looking for further advances in this market. Any pullback next week is viewed as an opportunity to look for bullish setups. I'm going to be looking up towards the 1.3715. Those are my top three markets heading into next week. Just remember, the dollar is getting very volatile, so if you're trading any of these dollar pairs, I do recommend trading them with a wide stop. Next is Aussie dollar. We did take out the target set last week at 0.66170. Heading into this week, we do have momentum to the downside. Any pullback, and I'd like to see some pullbacks first, any pullback is simply viewed as an opportunity to look for short positions. And I'm going to be looking down towards the next key of support at the 0.6407. Next is euro dollar. We are now accelerating away from the major breakout of the 1.03434. Any pullback next week, we're right near the low, so any pullback is viewed as an opportunity to look for shorts into the 0.9596. And if we break through here, I'm looking down to the 0.9413. Those are all of the dollar pairs that I'm looking at next week. I do favor pound dollar, New Zealand dollar, and US dollar CAD out of those five. Okay, so moving on to the yen pairs, starting with pound yen, I want to show you something on the monthly chart. This is serious for the pound. I mean, there's every chance that this market is coming back to the 125, if not down to the 115, 118. And what this is showing is potentially a very significant decline in the pound in the near future. Okay, so back to the 4-hour chart and looking at the near term, we do have strong momentum to the downside. I'd like to see a pullback in this market. And Forex volatility has picked up across the board. It's not just the dollar. So if you are trading these again, I would advise wide stops. Any pullback in this area, and don't be surprised to see a sharp or violent snapback in some of these markets, but any pullback is still only viewed as an opportunity to look for shorts into the 153.40. Next is New Zealand yen. Again, this really is just selling off. I mean, this is just like a waterfall sell-off. So any pullback, it's hard to say where it's going to pull back to, because unlike over here, for example, you have a tight base, breaks out of here, comes back and retests this tight consolidation and goes. This is so steep that really you just have to wait for the corrections to come and then start to trade them after they've developed. So any pullback in this market is still viewed as an opportunity next week to look for bearish entries down towards the next key of support at the 80.15. And last but not least, out of all of these, we have CAD yen. This is actually forming more structurally a nice bear flag, and any pullback towards the previous low over here is viewed as an opportunity to start to look for bearish entries. And I'm going to be looking down towards the next key of support to the downside in the target set at the 101.76. Bear in mind, this also, look at the volatility here. So you have to be very careful when trading all of these markets. I've said it a few times, but it's worth repeating, especially for new traders. I would suggest widening stops if you're looking at trading these markets to accommodate that volatility. Okay, so we're going to have a look at gold, silver, and Bitcoin before moving on to US stocks and having a look at how they're structured. Gold last week tried to form a double bottom, and this was at a major key area of support. And we did come up and we actually confirmed the double bottom over here. And then we broke down, and we actually broke down with momentum. And I tweeted out on Twitter that gold was attempting to put in a bottom in this area, but it failed pretty quickly. And not only did it fail, but it failed with momentum, which is telling us that further declines are likely. So I am looking for any pullback in this market next week as an opportunity to look for shorts into the 1633.70. And if we can break through here, there is a big gap between these two levels. Remember what I was saying to you recently? For those of you who follow these videos regularly, I was saying to you the gaps on these levels are widening. Pound, franc, for example. A lot of these markets, if you go back and look at the videos from a few weeks ago, I was telling you that these levels were widening, and that is signifying likely we're going to get an increase in volatility in these markets that we're looking at. And boy, did we have that in markets like pound, franc, which we looked at. So you can see there is a bigger gap now, and any break below the 1633.70, I am looking down to the 1575.72, and I would not be surprised to see gold volatility picking up as well. Next is silver. Now, normally we look at the gold-silver ratio. We haven't looked at it today because it's really going nowhere. It's completely neutral. So I favor gold shorts and silver shorts both the same. We are starting to break out of this consolidation. So any pullback, you can see break below the previous low with momentum. Any pullback is viewed as an opportunity to look for shorts down towards the next key of support at the 16.96. I also think silver could get quite volatile to the downside next week as well. And last but not least, we have Bitcoin here. Bitcoin has just been moving sideways, kind of put up a bit of a heroic resistance against this rally in the dollar. But if stocks start to break down, Bitcoin is going to follow. And I do think the longer term target we've had here, which we've been shorting Bitcoin pretty much all the way down to, the 16,492, is going to be achieved in the near future. So perhaps we get a little bit of a bounce first next week, but any bounce is only viewed as an opportunity to look for shorts in Bitcoin down to the 16,492. Okay, so I want to wrap up the video with the S&P 500, and what you can see on here, something we cover in the free GMT course, which is a bit of a standard benchmark in the hedge fund industry, is implied volatility ranges. It takes ranges in the S&P 500 based off of the implied volatility of the options market, and what it basically says is that these bounds provide roughly a 70% chance of containing price. And you can see on a monthly basis, it's traded into its lower bound or its lower range. And what this means is that the option market is telling us next week, there is a 30% chance of the market going lower and closing essentially outside of this. Now, if the market does begin to actually crash, those ranges are not going to hold up. However, it does make me think, and one thing I've been talking about on Twitter is there may be, because of the steepness of the dollar, there may be, and I'm just saying maybe because who wants to call a top now in that parabolic move in the DXY, but there may be a window here where the market pulls back a little bit next week, and as we see profit taking coming into the end of the quarter, because next week is the last week of September, and then we see maybe another week or so of correction into October before the next leg down, and the break of this low, which actually starts the next leg down in the S&P 500. Now, I did say to you, I do think in a market crash, we could be coming down to the COVID low down here of around 2,000, 2,200. I've avoided saying this recently just because I don't want to sound too ridiculous. I already gave out some crazy targets in the DXY, and at the time I think a lot of people thought I was crazy. So I didn't want to go too crazy with the stock targets, but I do believe there's a chance we come back down to these lows. I'm not saying it's going to happen next week, But with a stock market capitulation, which, as I've said to you for a long time, is on the cards, in my opinion, in the second half of this year, which we're in right now, I do believe we could be coming down to that level. So I do think what we're seeing in the markets is serious. I do think there is a chance that maybe we trade into the low, and over the next week or two, we have calls for a generational bottom in stocks, and it could be quite a sharp pullback if it is going to be, maybe for a week or two. But if that's the case, and if we don't come crashing through here next week and instead we bounce because we've basically ran out of room in the monthly implied volatility range, I do still believe we ultimately roll over to the downside and any bounce will be short-lived. So that's what I see. Very often the currency markets do precede the stock markets. Very often we can see moves in the currency markets preceding them, and I think that's what we're starting to see now. It does set up further declines in stocks and potentially a crash next month in October. It does also suggest further upside in the DXY, but as I said before, if this is going to happen, there is going to be a lot of volatility. And if you're trading these markets with tight stops, you're probably going to get whipped. So if you are trading these, just be aware of the market volatility. That is increasing, and please use wider stops and sensible risk management if you're getting involved in these markets. So that is it for me for this week, guys. I'm sorry to be the bearer of bad news. As I said, I hope you don't think I'm doom mongering here. I just really do see serious risks in the market as it currently stands. As always, I hope you enjoyed this video. And if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.